Um, Good morning, everyone. Bonjour tout le monde. And welcome to day 3 of this training on the statistical measurement of tax and commercial IFF. So you can, as the same as the other days, you can find interpretation at the bottom of the page. It's in French, Portuguese, and Russian. I'll take this opportunity again to also welcome the interpreters and to thank you again very much for the work. We know that it's not an easy task to translate and interpret training on the statistical measurement of IFF. So thanks again. So on Monday and Tuesday, we have seen 2 different methods on profit shifting. We have seen method 3 on the global distribution of M&E's profits and corporate taxes. And yesterday we have seen method 4 on M&E's vs comparable non-M&E profit shifting. And today and tomorrow, we will look at a different set of methods. We're talking about flows of undeclared offshore wealth. So today, again, the star of the day is Bojan Nastav, my colleague from UNCTAD. But we also have an example given by one of our other colleagues from UNCTAD, Carlotta Schuster. She's going to join us a bit later. So today we'll look at method 5, flows of undeclared offshore assets indicator. So we'll have a first part from now 9 to 10 CET on the method itself, and then applying the method. Both presentation will be done by Bojan. Then we'll have a break of around 30 minutes until 10:30 CET again. And then we'll have the example given by Carlotta. Of course, you can ask questions either in the chat or you can raise your hand. I'm copy pasting in the chat right now the webpage of the event in English and in French. You can find the program and you can also find the presentations of all methods in the 4 languages. So bear with us, our apologies that we don't have every method translated in every languages, but in the coming days, we will upload the remaining ones, mostly in Portuguese. For now, we have most of them in English and French, some of them in Russian, and we will upload the Portuguese as soon as we can. So I will give you the floor, Bojan, and thanks already for your presentation.
Thank you, Amandine. Thanks for this lovely introduction to our day 3 of the training sessions or training workshop. Good morning to everyone, and of course special greetings to our interpreters. Please do let me know if there are any problems in hearing or understanding me, so I can try and I'll try not to be too fast. People always say that I speak very fast, so I'll try not to get you into any troubles on that front. As for the presentations, as Amandine has said, so most of them have been or are being translated. Part of it is, of course, also due to the speakers. I am among those, so please apologies for our late, I'm going to say preparations or modifications, but as mentioned, so everything will be posted online in due course. So today, I'm going to present a method that is working on a just do that and this. So today and tomorrow, essentially, for those of us who will be there also tomorrow, and those of us who have been around for longer, not just today. So we will be covering the methods that are addressing the flows of undeclared offshore wealth and of course related tax evasion by individuals. You may remember that we have three main groups of tax and commercial illicit financial flows. So one is the profit shifting by multinational enterprises. So this is the method, or the couple of methods that has been discussed yesterday and on Monday. Then we have the trade misinvoicing methods, which will be covered on Friday and the following Monday. And now we are addressing the other, so the third type, which is the flows of undeclared offshore assets and tax evasion by individuals. Now, this pair of methods is the least methodologically developed, which means that the methods that we will be addressing today, and particularly the one tomorrow, has very limited application to date, which means that, of course, unfortunately, we will not be able to be as concrete or as technical as possible. Regardless, we will try and open up some of the questions and present the methods and potential things how to go around it. I am going to have to excuse myself for a few minutes. Please bear with me. Thank you.
Hello. Am I the only one who can't hear?
Hello. No, you are not the only one. Bojan had to excuse himself.
Hello.
For
I'm back.
Okay.
Can you hear me?
Yes, we can hear you. Yes.
I'm sorry, apologies. We have some medical issues in the family, so I hope I'll be able to get this through today. Okay, so as I was saying, so this pair of methods is the least methodologically covered pair of methods, which means that we may not be as concrete as we would have hoped for. And regardless, both of the methods have been put into the methodological guidelines for the pilot testing, for the measurement, to essentially obtain any feedback from the ground, from the field, so to speak, and to observe essentially whether additional aspects in the application of the methods that would be relevant for a statistical measurement of illicit financial flows. So the method that we are going to be looking into today is a so-called flows of undeclared offshore assets indicator. So I'm going to present this method shortly. Just before we go there, so I mentioned, we may remember from previous, but also from the definition of the illicit financial flows, that illicit financial flows themselves are by definition hidden, which means it is very hard to track them. And moreover, when we discuss flows of offshore wealth, there's another layer or maybe two layers of additional difficulty in matching those flows to the IFFs. The first one is relating to the fact that the stock of offshore wealth tells us very little or actually nothing about how it was generated. It can result from completely legally earned incomes or transfers, or it could be as a result of illegal activities. So simply being offshore does not mean it is illegal or illicit. it can be perfectly compliant with whatever tax and other regulations. It can be perfectly listed in all the parts of the definition of illicit financial flows. So generation, transfer, or use. So therefore, it is very hard to say and observe without looking into very much details of each particular transaction or asset to know if it is in fact illicit or not. And the second part, so illicit financial flows are by definition flows, which means that we should be observing the flows. However, the offshore wealth or the offshore assets are a stock measure. So we have a challenge of how combining or bringing the stock measures of the offshore wealth into a flow measure of illicit financial flows. So these are only a first couple of methodological challenges that have been addressed to various degrees and from various aspects. I've put here a gravity model and there's a question mark. So gravity model has been used or applied for, let's say, money laundering in some of the cases. We are going to take a look very briefly at one of the cases later on. So the application of those gravity models to tax and commercial IFFs may be worth exploring. But it is not fully developed yet. So the methods that we are suggesting in the guidelines do not deal directly with the gravity models, although gravity models themselves can be a part of those methods to support it, to provide additional information. So two methods are proposed or suggested in the transfer of wealth to evade taxes part. So we have method number 5, undeclared offshore assets indicator, which we will be looking into today. And the other one is looking at the offshore financial wealth, starting for a global level imbalance and then slowly trickling down to the country level. So the method number 5, if we just essentially just kickstart this and go directly into the method, first, briefly about the concept and the assumptions behind this method. So this method or this offshore assets indicator, is a so-called top-down method. You may remember that for a statistical measurement, a preferred option would be to use a bottom-up method. However, in some cases, this is not possible. So this is a top-down method. It is addressing the offshore tax evasion by individuals. It does so by measuring the excess of the value of citizens' assets that are declared by partner countries, so in other countries, over the value that are declared by the citizens of our country for tax purposes. So this means that, for a particular country A, what we are looking at essentially is a discrepancy, so a difference between assets that are declared offshore by citizens of country A. So what citizens of country A declare to their tax authorities. And on the other hand, another view would be to see what the assets of country A's citizens are reported in other countries. So in all other countries, what are the assets of citizens A reported? And then we combine and see whether there is a difference or not. In an ideal scenario, there would be no difference. So everything would be fully declared and reported to all the authorities. So the numbers would match. However, in practice, there is sometimes a difference. And similar to other discrepancy methods, such as a trade misinvoicing, we have to understand and try and see what is essentially driving those differences. And in most of the cases, especially in this method, this will resolve to using several set of assumptions, which of course may be a question in itself. So even though this concept of the method is relatively straightforward, and simple, we could say, it does have several important limitations that we have to, of course, at least know about and consider when we are applying the method. So the first one that we can list here is that the indicator itself does not distinguish between various categories of illicit financial flows, which means it will also include assets from illegal activities. So this is important specifically when we are discussing methodologies to report one single value for SDG indicator 1641. So this is the inward and outward illicit financial flow, so the total value. So when we are observing and measuring separate categories of illicit financial flows, either profit shifting, either tax evasion by individuals, either corruption or IFFs from drug smuggling, we have to account for those separately. And when we bring them together, we have to make sure that there is no double counting of the values. So this, of course, is posing a significant challenge, and it is opening up for another, let's say, round or essentially ongoing methodological work to address this. So this is important to keep in mind, which, of course, in this particular application right now, if we are only looking at this method, is not so important, but nevertheless, this is an important limitation of the method in terms of the SDG reporting on IFFs. Next, it only focuses on the side of the IFFs that are leaving the country or are outside our country, which means we are only looking at the outward illicit financial flows. So using this method, we can only see how much our citizens, so to say, are, let's say, hiding abroad, not declaring, which means that we are assuming this is the illicit financial flows to the outside. This does not tell us anything about how much inward IFFs our country is actually receiving or generating using whatever tax or other policies that are in place. So usually financial institutions are required to, confirm the citizenship of account holders, and this would be one source of data. And at the same time, of course, we would require, in order to calculate this indicator, to have tax authorities data that are being aggregated by country and then reported and shared individually. So data requirements are not insignificant, quite the opposite. I think they're very significant, and availability is very patchy, unfortunately. As we will see also later on in an attempt to apply this method. The application of the method, of course, involves some other difficulties. One would be the concept of citizenship. We know that citizenship would not always imply tax liability. So there are differences in the way how countries or tax authorities are addressing or treating different citizenships or dual citizenships, and also consequently, which is important for us, how they actually define tax residency. So which is residency for tax purposes. I could be a resident of one country, but I have a tax residency in another country, which means that I have to pay taxes in another country. This will depend on the countries, and this will depend on the system, on my incomes, on my activities. So those things are, of course, specific to a particular country, or even bilaterally, of course, that there are some agreements on that. And those elements or considerations may not be fully reflected in aggregated data or internationally available data. There are some cases, concerning the citizenship, the so-called citizenship by investment programs, and the countries are providing citizenship if investments happen. And we were pointed out to an interesting study recently, so studying the cross-border bank deposits, and the result of that study was that the deposits in tax havens increase after that country starts offering a citizenship by investment program. So which is clearly indicating that these programs are potentially or mostly used by tax evaders. So something to be looking into more deeply. However, aggregated data would not allow for that kind of analysis. In that respect, it is, again, as with other methods, very important that we have a not only one institution or authority in a country looking into the method, but it is essential that we have a collaboration of particular or in multiple institutions in a country to address this issue. So it's the tax authorities, the tax inspectors, it's any other authorities or expertise that are available that should be brought to the table when we are discussing this indicator or addressing the illicit financial flows. And of course, a major limitation is also, as we mentioned earlier, or indicated earlier, could be that the assets versus flows question. So the assets, are a stock measure, and then we are essentially looking for flows measure. So how to go about this limitation. So luckily, we are always trying to come up with some sort of measures to overcome the limitations of the method, and this may work to some degree, and in some cases it may just simply not work. So we are resolved to using certain assumptions, which of course may be critical, number one, and number two, they may change in time, they may change in place, so they do not offer a methodological stability or standardization that we are essentially trying to achieve. Nevertheless, gaining experience on various applications, on various methods will provide new insights into the method, into the requirements, and therefore will provide a response. Either, yes, this is good, go ahead, or B, no, this is completely wrong. You should be using this and that. So either way, when we are pilot testing the methodologies, I think this is very important. So the first way, I would say, in a way to overcome the limitations of the method is to address data availability. So potential data exchange among national authorities and data transferred from financial institutions to tax authorities. So all of those things are required if we want to work on this method and want to apply it. It is also important that we have international data exchange. There are some recent developments in this area using the Common Reporting Standard by OECD, but this would be definitely one way of getting forward to a safe exchange of data. Of course, we have to note next to it that any data exchange between authorities, so either within or across national borders, should strictly be abiding by relevant agreements between competent authorities, and specifically also with respect of statistical confidentiality. So those two elements, even though they might be seen as an obstacle in many cases, are essential when we are discussing statistical measurement of illicit financial flows. So there is a very thin line in all the measurements of the IFFs, but I think here in particular, between a statistical part or purpose and an administrative purpose, prosecutions and so on. So there is a very thin line here, and we should be cautious not to overstep it, because we want to provide a measurement so we know how much illicit financial flows there are in a robust and standardized way that could be reported internationally. And then those values could be then used as evidence-based for policy making. So the question on how to address the issue of stocks versus the flows, well, there's a very simple way around it. Simple might also mean simplistic or oversimplistic, which is to consider the flow as a difference in two subsequent stocks. Of course, this may pose another sort of challenges and questions, but at least for a start, we can come up with this sort of assumptions. And then, of course, there are questions like, what is driving the changes in the values of assets? So, you know, it can, the growth of wealth or whatever assets, you know, could happen because of capital gains. So should we be accounting for this? If yes, how? But of course, on the other hand, it should be reducing or diminishing by the consumption of wealth. So how do you account for that? Can we account for that? So various assumptions are required in order to address those issues and essentially come up with some sort of a measurement for the illicit financial flows that are coming from this method. So a very crucial part in all the methods, of course, is, so one is the concept and the calculation phase, which we will also take a look in the next steps. But also a very crucial one is the question of source data. So are data available, and what type of data do we actually need? So we saw earlier that essentially what we need is the amounts of declared assets that are being held abroad, so to our tax authorities, but then also to try and see what other countries, our partners, say how much assets our citizens are holding in their countries, and combine them together and observe whether there are discrepancies. So Bank of International Settlements, so BIS, has a locational statistics part, so that these data are published by location. So some of the data would ideally and potentially come from the BIS. However, even though this may be seen as a very comprehensive, potentially, you know, ideal data source, it is suffering significantly from coverage. So not all the countries are covered, and of course not everything is included in there, specifically referring to the assets. So it's not all the asset classes are considered. For example, I believe like the art, real estate, or even cryptocurrencies may not be included, which are, of course, important elements when we discuss holding offshore wealth and, you know, transferring those funds abroad. Alternative international source would be OECD's country common reporting standard, CRS, which is again covering only the signatory economies. Nevertheless, even though it is limited, or even though both data sources are limited, they are providing a good starting point to actually observe what else would be needed, but also what actually works and what doesn't work. On the other hand, we mentioned earlier that, so, you know, financial institutions do report to national tax authorities. So those national tax authorities would provide a important and very relevant data source. Practice has shown, however, that there are some data access limitations, which is understandable. We are discussing very sensitive data here, and therefore it is even more so important to have memorandums of understanding and in line with statistical principles to access those data. In all the methods, when we are trying to address illicit financial flows, we are striving to propose and, of course, favor the data sources that are nationally compiled, which is, of course, still the case here. We definitely need those data. However, illicit financial flows, by definition, are crossing borders. Therefore, we always need to have some additional data, either cross-checking or validating, or actually supplementing our data from abroad. So this could be from our trading partners or our neighbors or whatever other bilateral agreements that are possible. In some cases, we also mentioned global data sources could be used as a supplement. So we should be keeping this in mind when we move ahead and we start collecting the data. So some of the data are available, some of the data are not available. Let's see what we can use with the data that are available within our country and for our country from abroad. Excuse me. Okay, so on the calculation phase, so how do we actually calculate this index or this indicator? We can see that it has a very straightforward formula. It is very simple. So the undeclared assets of citizens of country I is marked by we have it here by the phi, and then essentially this is a difference between two parts. So the betas are looking at the assets of our citizens abroad. So what other countries are saying? Let's say I'm a German national, and I have assets in Switzerland, in Austria, in the UK, and in all whatever other countries. So all those countries would be having values of my assets held abroad. So this would be the betas, and we have to calculate and we have to sum them up and say, so citizens of Germany have assets abroad as reported by partner countries in the amount of, let's say, 10 billion euros. Alpha, on the other hand, is the assets that are declared by citizens of our country. So let's say citizens of Germany are declaring this amount of data that are amount of assets are being held abroad. So let's say alpha is 9 million. So we have a million. So we have a million euros difference here, which would be saying, okay, so there is 1 extra million assets held abroad that are not being declared to our national tax authority. So ringing a bell, something is happening with the illicitness here, right? So we mentioned that there are several methodological issues that are important, and we are only going to address 2 of them. The first one is assets versus flows. So we said that the indicator is measuring the assets, so the stock measure, and does not refer to the flow measure. So to obtain the flow measure, in theory, this is how it is done. So we take the stock of current year and deduct a stock from a previous year to see how much the flow has happened in this year. So, this may work well in theory. However, there are 2 specific and very pertinent, of course, questions that we should be addressing. So the first one is, what is going on with a consumption? So if the assets are being consumed abroad, of course, these assets would be diminishing. Do we have means to address those consumptions? If we do not take them into account, of course, we may be leading to a potential overestimation of those assets and potentially flows that are being held abroad. Unfortunately, using this data and using this methodology, we cannot account for that. On the other hand, capital gains in an offshore countries or jurisdictions could be conflated with the IFFs if we do not account for them. Well, there is one way that was somehow addressed in some of the case studies, is to try and include a factor of market valuation to the offshore wealth. So using this V, and then we're trying to see, so if the market valuation has gone up, but let's say 5%, so then that means also our stock has gone up by 5%, which means that if our stock grew by 5%, the flow itself would be 0. So to address this, the proposal has been put forward, and we have essentially simply applied it here in the absence of any other better alternatives at the global level, at the general level, is to use the so-called MSCI World Price Index. So this is a global equity index, which is designed to include or reflect the performance of various stocks around the world. So it has also developed and emerging markets. So it is therefore trying to be comprehensive and having information for all. Of course, there are some considerations and question marks around this. Regardless, in order to somehow account for the capital gains, this is the method. So this is the formula essentially how to calculate the flow of those assets in period T. And the second consideration is also, we mentioned earlier, so we are essentially only able to measure the outward flows. So if the flow from previous equation, so let me just go back a little bit. So if this flow in this equation is positive, this would mean that, of course, our citizens are holding more assets offshore this year than they did last year, which means that the flows were positive, but these flows were leaving our country. So we are having outward illicit financial flows in that amount of money. However, what happens if those flows are negative? This would not mean that we are addressing or we are observing inward flows, right? So the challenge is, of course, that also that those increases could refer to capital gains, as we said, and the negative flows may reflect only the consumption. So we are not sure essentially what is going on here and what may be actually driving those flows that we are observing. Of course, in some cases, a huge question mark is put on the main premise that are citizens actually required to report assets held abroad to national authorities? We will see later on that this is not always the case, which of course brings another setback to the application of the method. Regardless, as we said, we can still go ahead and try and see what can be done. So, having all these considerations in our minds, we can essentially, from observing the flows, determine how much of the illicit financial flows are leaving the country in terms of outward illicit financial flows. So this can be calculated using this formula, which means that if a flow is a positive, and we have in a way accounted for capital gains, let's consider that this is an outward illicit financial flows. As mentioned, again, if the flow is negative, we have no means at this stage to say this is going to be a inward illicit financial flows or whatever other explanation for this is, which means that if it is less than zero, we simply cannot use it for the IFF measurement at this stage. We could, in an ideal scenario, in order to get the inward IFFs, we should be actually producing all these measures in all other countries and trying to get the mirror image of how much money are actually being flown or put into our country, and to determine the inward illicit financial flows. So without a fully clear concept that would support the measurement of inward and outward illicit financial flows, so this indicator is only limited to the outward IFFs, and even so, we see that there are many assumptions behind it. So regardless, we mentioned earlier, this is one of the proposed indicators to pilot test to see what data may be available and what results may actually happen. Okay, so with this, I will stop here with this presentation. But if you allow me, I will, unless there are any immediate and pertinent questions, I would like to essentially go to a next presentation, which may shed some of a additional things. But I think there's a question, right?
Yes.
Yeah.
Yes.
Perfect. Then I think we can just try and go with that first. Please go ahead.
Okay, Mr. Said,
Yeah.
take the floor. Yeah.
Yeah. I'll talk in Portuguese. Muito obrigado, Bojan, por esta brilhante apresentação. Apesar de a metodologia ser a menos complexa até este momento, eu achei um pouco mais acessível de se aplicar do que os outros métodos que nós vimos nos 2 dias passados. A minha questão é relacionada com a questão da diferença entre o fluxo e os estoques. É que, de acordo com a fórmula que nos é apresentada, embora estejamos a calcular o fluxo dos FFIs, a fórmula está a dar indicação de que nós estamos a calcular o estoque.
I'm not sure if I actually got of all the question, but so the question was, the formula is essentially asking us to calculate the stock, but how do we get them to the flows? Was that a question? Because if it was, yes, it is true. So the indicator itself, or this indicator is essentially addressing the assets. So the assets that are being held abroad. So the difference in the assets, which is still a stock. However, if we calculate stock in 1 year and then
si on arrive à calculer
another stock in another year,
des stocks sur un an.
I'm hearing French. Okay.
J'entends le
Anyways. So when we calculate 2 stocks in 2 consecutive years, then the difference between those 2 stocks, accounting for capital gains using that index, that V, can be attributed or transformed into the flows. So this is a basic idea behind it. Of course, without further testing, without further methodological and also data availability reviews and tests, there have been no further steps developed at this stage. So it is essentially trying to see if this would in theory work or in practice, having in mind, of course, as we mentioned, several other methodological implications that may be, really putting all these results into question. Having said that, I think it is important that whatever results we do obtain, they have to be validated, either using whatever other approaches we might have, but specifically using qualitative approach involving experts and whatever expertise we have in the field, who would be able to confirm that this would make sense or no, this is completely wrong. But those experts have to be involved already at the beginning. So when we use certain data source, when we check it, so what is going on, what are the questions in the data that we are essentially inputting? Okay, so I took a little detour, but Mr. Dade, I hope I have at least partially addressed your question.
Thank you, Bojan. Thank you.
Is there any other questions? Est-ce qu'il y a encore des questions à ce stade de la présentation? Okay, maybe we can go to the next presentation and it might explain also.
Okay, sounds good. Now, so this next presentation, it's going to be a little bit longer than 10 minutes, so I hope you can bear with me. I think it'll be very good just to wrap up the session, to eat a little bit into our time for the break. But essentially what I'm trying to depict here in this presentation is to see whether what are other additional aspects in the method that are, pertinent when we are actually applying it. So, wait, yeah, okay. Can you see my screen moving?
I think we are still with the former presentation.
Okay, that's weird. Okay, let me
on the last slide.
Yeah, I'm just gonna stop sharing. I'm gonna start it over from this.
Okay, we see it.
Good.
But not yet in full mode.
Yeah, okay.
Yeah.
It's okay now? Yeah.
Perfect.
Okay, perfect, thanks. So as I mentioned, so there are some additional aspects that we may want to address when we are essentially looking into this, applying this method. So those considerations may be broken down, of course, into several categories. One would be the one that we may be looking into specifically is that what data are actually needed and what data makes sense, but also how data would affect the results. So we will be looking at the data availability in terms also, of the range, so the time period covered, but also volatility. Are there any weird patterns observed in the data, and can we provide responses to that? And the other part is, trying to see whether certain other elements could pose a problem when we use specifically internationally data. We are going to stop very briefly on this MSCI World Price Index, just to say what it is, and trying to observe whether there could be any alternatives to that. And very briefly on a gravity model, as I mentioned earlier, the gravity model has been proposed in some cases to be applied in, let's say, observing flows so financial flows across the borders. So it might be a good way to use it to complement or supplement some of the assumptions either in this method or even more maybe in the one that we will be looking into briefly tomorrow. So I'm sorry. So the first question is, so what data do we actually need? The main assumption behind the model, as behind this method is, as we remember, is that we are trying to say that there are undeclared assets held abroad, which means that the international reported part, so the betas, should be higher than what is reported to national authorities. And starting from this, of course, we can then see what is essentially needed. So the alphas, these are the national reported values, should be available in one way or another to national tax authorities. So they are the national tax authorities would be the data source for alphas. Betas, on the other hand, of course, would be referring to international reported data. So it would be coming from our partner jurisdictions, reporting on our citizens. So how much our citizens have data in those jurisdictions. So we mentioned earlier, this could be coming up from the BIS, so locational banking statistics, or from the OECD's common reporting standard, if available. But of course, they could be other bilateral data exchange also exploited. If we know that our country, or we observe through whatever means that we are dealing, let's say, our assets are being held abroad in 5 different countries, we could essentially get in touch directly with those countries and have bilateral exchanges of data to confirm those things. So our colleagues from Finland have been actually very proactive and have tried to apply this method to see how it can be applied for the case of Finland. So they shared with us a very, I think, important experience in terms of what data sources do tell us. On the BIS statistics, so Bank of International Settlement statistics, they do observe that, so the time series is long enough for the analysis. Okay, so the data is from 2014 onwards. However, what is unusual is that there are some odd peaks we see from like at the end of 2018 and beginning of 2019, but then again in 2020. So, and they actually observed that it is hard to believe that the Finns have doubled their cross-border assets. So something is actually not fully correct in the data source, or at least it seems it is not fully correct in the data source. So those questions of any peculiar or unexpected movements in the data that are being held abroad should be inspected with care before we actually apply those data. And this is what I mentioned earlier, is a point where it is very important to have experts on specific types along the way from the start and to the end of the methods application. So they observed that the value of assets that are being held abroad by Finnish citizens are in the range somewhere between $1 and $2 billion. However, on the other hand, they also observed that from Statistics Finland, so they have the household asset statistics, the total financial wealth of households was about 200 billion. So honestly, here I'm not fully sure. And I believe actually Ak is with us, so he can maybe confirm later. But if this 200 billion refers to everything or just the ones being held abroad, but in any case, if there are any national or additional sources and resources available, we should be cross-checking and making sure that whatever input data we are using actually makes sense. It is also important to know, as they have also observed, that so that the data would also include not only the households, but also the nonprofit institutions that serve the households. So this is the category, as we know, from the national accounts and other parts. They also observed that reporting country level is not available using the BIS statistics. So this is just a brief print screen of the data that are available at the BIS. So we see the measure, we see what we have, the countries and the timing and everything, and there's also a link there. So I mean, of course, you can use this link. This is specifically for Finland, but you can simply just change the country that is of interest. So we're not going to spend too much time here, but in the sessions that are following, so Carlotta will have a very practical part, and she will also be looking at how to actually get the data, where to get them, what the data mean, and so on. She will have a better practical overview, which I think will be very useful for all of us in trying to apply this method. Now, on the other hand, the tax data experience that they have, so from the national perspective, a first and very important, I think we can say, limitation in applying this method is that there is no mandatory declaration of assets. So there is no wealth tax. In fact, in several countries, this is the case. So citizens are not required to report whatever assets or whatever wealth they have abroad. They do usually have to report on the income that was generated using those assets abroad. So, this could be a way with some additional, we can say with some additional assumptions, how to get from the incomes to the rates, and then we get to the assets that are being held abroad. But this is yet another story. So the BIS statistics were then instead compared to the common reporting standard data that are available for Finland, I believe for 2018 and 19, but I'm not sure. I apologize, I forgot. But the major, a stunning thing that was actually observed was that the value of assets in the CRS were about 10 times bigger or higher than the BIS statistics. Okay, so we have two international data sources, and they're showing completely different figures. So what to do now? Again, Of course, this is a major setback, but we have to resolve in using one or the other, or finding a way which one is more robust, which one is better, is of higher quality for a statistical measurement. So the expert knowledge, again, is crucial in getting this understanding and then the application of the data. It is also important to know that the CRS data would, according to their observation, include people who are not taxed in Finland. So it is essentially hard to say which assets, so whose assets, should be actually included in the estimation, even though the data are available at a reporting country level, which is of course important. So of those additional considerations, so the first one we mentioned already, and which is essentially a very significant problem in various countries, that there is no wealth tax, which means there is no requirement to report on the data, on the assets that are being held abroad. So they're declaring income, and we can maybe think about this in the further developments of the method. The question also, of course, comes up, so what are we to do with the exchange rates? Well, if we collect data bilaterally and directly from the countries abroad, of course, there will be different currencies. And when we do that, every time we have a period observed, in the end of this period, so when we are taking at the stock measure, we should be applying a proper exchange rate to put all different currencies into a single currency, our national or the US dollars or whatever other currency we want. There might be, of course, some currency exchange rates fluctuations that are driving some of the values, but it is essentially assumed in the model that or in this method, in the application of the method, that the exchange rates would not be a significant factor in trying to get our assets abroad illicitly. Moreover, if we use international reported data, they would, like the BIS, they would already be reported in one currency, so they would already be transformed. So therefore, this question may not be fully relevant. However, if there are cases when multiple currencies are compared, of course, the exchange rate is an important consideration to be taken into account. So we mentioned earlier that the capital consumption is essentially not accounted for because we have no means, we have no ways of addressing it. So we only know that this could be happening, but without specific and detailed knowledge, we have no means of accounting for it. On the capital gains, on the other hand, we said, okay, so let's do that. Let's account for capital gains using this MCIS World Price Index to determine the yearly rate of increase of our assets. Now, this index, I also believe is based on share prices, and we could have discussions about how much of the wealth that is being held abroad and the capital gains from it would be put in shares, how much would be put in real estates, how much should put in interest, just in the banks or whatever. Yet again, without detailed knowledge of which portion of assets that are being held abroad would go to a specific type, and then also leading to different rates of returns of those to determine the capital gains, it is probably the safer way to essentially use one of those indices as a general one. Another, I think, explanation or thinking in supporting that just go with an, let's say, an average assets or capital gains indicator would be that if our holders of those assets abroad are thinking rationally, they would be comparing various options, and they would always be, having some sort of opportunity costs, and they would be comparing those rates as benchmarks. So, if one of the rates would go up, then of course there may be fluctuations, obviously, but in general, we can say that the overall average capital gains using this index, the stock market, might be essentially a good approximation in absence of any other better alternatives. So previously mentioned, so this MSCI index is a global equity index, which is measuring the performance of stocks around the world. I think it has about 20-something developed economies and almost 30, they call emerging economies. We can look into this index. It's online, of course. Whenever we use such indices, it is important to understand its values, its creation, so its process of compilation. So for a statistical purposes, I believe this is very important. So the questions, of course, come up: is it a suitable index, or are there any alternatives? In the absence of it, and also for this method, in this, let's say, primitive form, this index is a suggestion. You can find a source down there, so a link, so you're free to check it and see essentially what this index is and how it can be applied, and then you can check with national experts to see if this would make sense. So I don't think that there's anything much actually I can say here. On the gravity model, so very briefly on this. So gravity models got their name from Newton's law of gravitation, which means that different sizes would affect each other bilaterally, so to speak. And in a traditional way, gravity models were used to estimate bilateral trade flows. In its very basic form, this is the formula of the gravity model, which is essentially saying that the trade flows between two countries is related to their economic sizes, but also inversely related to their distance. So distance between the countries. So the larger the economies, the bigger the flows. And of course, the closer they are, the bigger the flows. Of course, this formula from before, so that the general or the basic formulation of the gravity model is very easily transformed and suitable for econometric modeling. So we are essentially using a logarithms to change it, and then this is the formula that we have that we can easily put into the whatever econometric software that we're having. So what is F, what is M, what is D? We could, of course, discuss, refine. We could also add additional parameters to it, such as levels of corruption in different countries, the secrecy indices, or like if there's a common language, which could affect whether flows would be going from one country to another. So various of those parameters could be added to refine this model. And they have actually been applied in various cases, as mentioned earlier, traditionally to the trading, to the trade flows, but also in some recent applications, also to estimate not necessarily the IFFs directly, but at least some of the contextual parts of the IFFs. So observing also the financial flows. So, we could, in one way, to estimate, let's say, a normal trade flow between the two countries using this, and then compare it to an actual trade flow. And then any difference, we could just say, okay, this is the IFF part or the IFF element of the trade. as with everything in life, there are pluses and minuses to the gravity models as well. I believe so that the major strength of the gravity models lies in its data requirements, meaning that the data that are required to estimate a gravity model would only, involve usually or commonly available statistics like economics and geographic data, but also some specific like the corruption and so on. So more, of course, research has to be conducted in order to see this approach can be a very good starting point on IFFs, specifically for countries that would lack some other types of data that would be required for whatever methodology we would be looking in. Now, the major limitation I see is that the gravity models are, of course, their outputs are only estimates, so that they're fully estimated, so that there is no attempt to directly measure the IFFs in its current form, right? And moreover, it is in most of the applications, the approach is attempting to essentially model all those flows at a macro level, which means that we cannot make these aggregations. We cannot look deep into particular sectors or whatever parts of the IFFs that we might be wanting to look into. So given all these, limitations and early stage of application of gravity models for the illicit financial flows, gravity models could be useful for complementary or supplementary estimations or confirmation of some of the results, or in some cases as a part of the wider methodology. And there was a case that was applying gravity model, to essentially identify flows that are appearing to be abnormally high according to the other models. So they were essentially looking at the cross-border banking transfers in Italy. It was a micro data-based model, and they were looking at the cross-border transfers that were made by private customers. And of course, the National Financial Intelligence Unit was heavily involved in this work. So the results actually turned out to have, I would say, significant outcomes. So one was that they revealed that there is a positive correlation between financial flows and foreign GDP and population, and the FDI and the proximity, which of course all makes sense. But also there was a negative correlation with firm level tax rate, which means higher tax rate, less flow. Of course, this is kind of supporting this thing. So this is essentially a complementing an empirical analysis, and we should be, of course, adding some contextual interpretation, if we want to say it that way, to essentially use this gravity model as sort of as a risk assessment to identify, and this is why those two charts are here, to say, so what are the risky and the non-risky, let's say, jurisdictions or flows? If we can identify those and say, okay, so how much of our money is, or of those cross-border financial flows are being put or flowed, transferred into risky areas. So I think with this, it is interesting to see how the gravity models could be further applied in various countries. And I think they might provide a additional layer of information surrounding the tax evasion by individuals in terms of undeclared flows of assets. Okay, and now I think I have taken sufficient amount of time, so I am going to stop here and hope you're not asleep yet after a few days of listening. But please, if there are any pertinent or immediate questions, I'm actually happy to respond. Otherwise, we can see if we could have a break. So Amandine, back to you. Thank you.
Thanks, Bojan. Thank you very much. For now, I don't see any questions, any hand raised. You can also write them in the chat. If during the break, for example, you have a question, you can write it and then we'll answer during the next session. But anyone has something to say, even a comment, like feel free to let us know.
I think everything is very blurred.
Or very clear.
Yeah.
Or maybe it needs a bit of time to digest the content,
and
right?
I think it'll be also very good when we see Carlotta's part. She's going to have a more practical twist to it, which will be actually also easier to to understand and to ask further questions.
So maybe we can take a break now.
Yeah.
So of the method and the practice of the method as it was exposed by Bojan. So now we're gonna go into more concrete stuff with specific examples. So Carlotta, the floor is yours.
Great, thank you, Amandine. Thank you, everybody, for organizing this regional workshop today, and thank you for giving me the opportunity to present my research here. So today, sorry, I'm just checking how do I forward the slides.
Yeah, for now it's not moving.
It's okay, yeah. I found it, sorry.
No worries.
So I'm giving a really short overview of offshore wells and how is it measured in international statistics. We look at the different data sources on the international level and also data leaks that are used in the literature to identify offshore wells holding. And then we're going to dive into detail into the Bank of International Settlement locational banking statistics, which is one of the most used databases. And we're going to go to the website to look at how we can download the data, what are the variables that are of particular interest. And then in the next step, I have already prepared some preliminary analysis of country data and also for the whole of Africa. And then we're going to look into the link of offshore wells and IFFs. So how can we link this offshore information to the conceptual framework of how we cannot link it? And how can we deduce from offshore wells holding to illicit behavior? And really the key of this presentation today is that I'm basically presenting you a puzzle, and it is needed to compare this international information with national administrative data in order to solve this puzzle. So let's dive right in. So the interest of offshore wells and beneficial ownership of company have significantly increased over the last year. A lot related to this different leaks that we saw in the media. So Pandora leaks, which was this year, Panama Papers, Paradise Papers, and Swiss leaks, where private information was exposed, and it also people started to understand that this is a real problem. And this challenge of identifying the true owners of assets of companies has moved to the policy agenda. International statistics, the ones that I'm presenting today, they are often not very granular, so they can only be used as indication of what is going on. And in general, private wealth is not only hidden in the small islands, how we imagine it, maybe this tax islands, but private wealth can also be hidden in larger economies, which makes it much more difficult to distinguish legitimate offshore deposits, for example, linked to international business and hidden assets. So here I'm showing an excerpt of Zuckman's book, The Hidden Wealth of Nations, which was published in 2015 and is still kind of one of the reference books. And we can see that with his method, he says that around 8% of wealth and around 10% of world GDP is held offshore. And we can see he looked at the different regions. So for example, in total, Europe is the most affected, and then relatively in terms of percentage of wealth held offshore, we have Russia and Gulf countries. And if we look at Africa, it's still very significant. So this is in billions, so it's 500 billion and 30% of total wealth, which is held in offshore accounts. Here I'm comparing this to another figure, which is from our report on economic development in Africa, where we looked at capital flights. So capital flight incorporates not only banking, but also gaps in trade transaction and revenue loss from tax avoidance in the different regions. And we can see that there is a regional component to it. But I will also later explain how it's very difficult to link basically the existence of offshore wealth or even flows of offshore wealth to this activity where we know it's strictly speaking illegal.
Excuse me, Carlotta, just 1 second. There is no Portuguese interpretation. May I ask the interpreters to connect, or what is going on? Because we are losing some participants, so it will be good.
You let me. Sometimes if you go to the now
is there a Portuguese interpreter here? If you are here, can you write in the chat? Or
it seems Aaron is
okay.
there, but
yes. So Aaron, is it? Can you translate? Can you interpret? Aaron, can you answer? Can you answer in the chat?
Amandine, we hear you very, very distantly. I don't know.
Okay, can you hear me now?
No, still the same. I think, wait, can you talk now?
Yes, can you hear me?
I hear you well.
Okay, I heard you well earlier, but now I'm in the English channel, so I'm not so sure anymore. Please go ahead.
Okay, Carlotta, just
perfect.
Go ahead. I don't know, we lost the Portuguese channel.
Okay, so I'm gonna speak maybe a bit slower if the Portuguese colleagues are listening into the English channel then. So we are looking now at the different publicly available data sources, and we're going to speak about national administrative data sources. So the Bank of International Settlement has this locational banking statistics. So this is basically 43 financial centers disclosing on the deposits in their country owned by foreigners. And the limitation is that it's just linked to deposit and does not include securities like stock and bonds. So it's missing a large share in terms of what financial instruments are used to hold deposit offshore. Then there is a IMF database on international investment position and coordinated portfolio investment surveys. I have created at the end of the presentation, which will be shared with you, a data appendix where you can go to the different websites and look at the different data, as well as papers that use this data in an interesting way, trying to identify offshore holdings. The next one, which is also really interesting, which I'm not going to discuss today, but I think it's a very good additional source, is that the Swiss National Bank publishes statistics on bank deposits, but also portfolios of equities, bonds, and generally all securities that are held in Switzerland by foreigners. And that is really relevant because, especially for private offshore wealth, Switzerland plays a very large role. And this is an estimation that I've took from Gabriel Zuckman's book, where it says he estimates that it's 30 to 50% of global private wealth, which is held in Switzerland. And then there are obviously the data leaks that we've already spoken about. There also in the appendix, you find the link to the websites where you can look at this data leak. So there is a consortium of international journalism, and they also try to prepare the data in a way that it's more accessible. And the last part is administrative data. So this is data that you have access to, but that we don't have access to, and which, like I said before, is the key to solve this offshore puzzle and to understand really what wealth, offshore wealth can be linked to illicit activity like tax avoidance. And ideally, you would use a triangular approach, comparing your administrative data with the international data sources, and then also try to find additional information on the data leaks. So administrative data can be audit data from, but it can also be voluntary disclosure schemes. So sometimes what countries do is that they give citizens a specific amount of time, let's say a year or 6 months, where they say if you disclose your unpaid taxes, you can pay these taxes without being criminally investigated. So you can kind of come clean. And this obviously creates a wealth of information and a really good understanding on what's the type of person that evades taxes, which are the mechanisms that they use. And so that's another potential source of additional data. So today in specific, we're going to look at the locational banking statistics. So again, you have here 43 financial centers from around the world who are reporting on bank deposits owned by non-residents and disclosing this by partner country and size of stock and flow of these deposits. They have different reporting entities. Here we select non-bank deposits in the database. I'm going to come back to that later when we look at the data. And we're selecting that one because that's most linked to household wealth, individual wealth, let's say. I've classified this reporting financial centers between haven and non-haven, which is kind of a difficult classification. So I followed here Anderson et al. 2017, which is one of the standard papers. And he groups countries in these two groups linked to institutional characteristic like bank secrecy rules and confidentiality around bank deposits. And following Anderson classification, Switzerland, Luxembourg, and Belgium are classified as tax havens here, but that does not mean those are the alone tax havens. In general, what we can say for African countries is that actually this small type of island states that are also classified as tax havens are not normally reporting so many deposits from African countries, but it's usually this Switzerland and Luxembourg and this kind of more classical private wealth havens. So here we're seeing all the countries that are reporting this information to the Bank of International Settlement. And we can see that a lot of this, I don't know from you when I hear tax haven, I guess also driven by this data leaks, I just think Panama and Bahamas and, you know, I don't know, maybe also the image that we have a bit from the media. But a lot of like Luxembourg or Switzerland are also very classical tax havens. Here, for example, we take a snapshot. This is not yet for Africa, but this is for the whole world. And we can see a bit the size of bank deposits reported by the different countries. And here, for example, the blue line on the top is Cayman Islands, and we can see there was like a spike a bit around the point where there were really high commodity prices. So when we look at this data, especially over time, we often do see that there is a kind of real economic driver. So this is not a totally abstract independent. We see that global trends do drive this movement of offshore deposits. And now I'm gonna switch to the website. So this is the website. I hope you can see it well. I can also share with you quickly in the chat.
Yes, we can see it.
The link to the website if you want to open it as well on your PC. And so basically here we have different ways of interacting with the data. The Bank of International Settlement proposes us 3 ways of interacting with the data. The first one, which I think is maybe the most interesting, is to have this, there is an interactive tool. Where they're kind of trying to visualize the different movements, but it's kind of complex and it's also only linked to the reporting data, to the reporting countries. But there, what is really interesting, what we can do is that here on the top, we can pick a specific country. So I've already done this. So here I've picked Algeria just because it was the first one in the list. And here from this overview, so from your point of view, anyway, you're most interested in your country data. So you're maybe not interested to look at the whole region. So this, I think it's the easiest way to access the data is to pick your country that is of interest of you. And then we have different elements that we're looking at here. So for example, first in terms of timing, we see this is quarterly data. So Q2 2001 is the latest information that is available. And then here right now, we're looking at the stock of offshore deposits, meaning at second quarter of 2021, what is the total amount held in this 43 offshore centers by Algerian residents. And we can also change here at the top. We have the different measures, for example, to the flow measure, which now shows us what is the change from Q1 2021 to Q2 2021 in terms of offshore holdings. This is in million US dollars. And so let's go back to the stock measure, and I will show you both stock and flow measure because the definition for illicit financial flows should be the flow measure and not the stock measure. So in terms of using this as a in this statistical framework, we should look at the flow measure, but the stock measure is a bit more intuitive to interpret. So then we are looking at the liability side because we're particularly interested in bank deposits. And so here we're looking at the variable loans and deposits. So here we have almost 3 billion in Q2 2021, which is held by Algerian residents in this 43 offshore financial centers. Another way to access the data, going back, is to, if you want to have the look at specific elements, you can look at the tables here. You can even select the country and it will create a PDF. You can look at specific instruments, but generally what we're interested in is non-bank deposits. That's the variable that we're interested in. Then here at the bottom of the website, we see the explanatory notes. So I've also opened this here as well to give you an idea how the document looks like. So I found that note really useful. So then, for example, currency breakdown. So this deposits are reported in different currencies. So if the currency is something that is of particular interest to you, and just in general, if you have some question about the data set, it's very interesting to just search what you're looking for in this document. And they really made a very good job at trying to make it as self-explanatory as possible. And then coming back here to this initial website, what I also just shared in the link that I shared in the chat. We can see here at the bottom, we can also download the single CSV file. I've also prepared this here, but it's a huge file and it's actually quite complex. I'm also going to share this data with you, and I've also actually my intern Ha-Young, I don't know if she's here, but I really wanted to thank her for all her hard work as well. She prepared the data for the 11 pilot countries. And so here in this data file that I downloaded from the website, I've highlighted the different variables where you can make a pick or a choice in different colors. And so, for example, here, this L measure, you can pick if you want to look at the flow or at the stock. Then again, similar to what I showed you in the interface on the website before, which I think is the easiest access because in the end, you're only interested in the data of your country. You pick total liabilities. We're looking at loans and deposits. That's the financial instrument that we're interested in. Here I put all currency because I want to have everything together in US dollar, and Bank of International Settlements, they also do a really good job with the exchange rate, because if it's different currency that come together, there's always a question of what's the best valuation of that currency. And here then, like I told you before, we're interested in non-bank deposits. So I pick here non-bank totals, but you could also look at other sectors. If that's, for example, stood out in your country analysis that there are other sectors that are actually driving this offshore deposits. And then here I picked Algeria, again, because it was the first country in the list. And then if we go here all the way to the end. We see this number, again, almost 3 billion that we saw before as well, in terms of liability, in terms of stock of offshore deposits by Algerian residents in these 43 financial centers. So coming back to the presentation, let me put it in the correct presentation mode. Oh, it started from the beginning. One moment, please. So now here I've used that data from the BIS website to do some preliminary analysis. So here we see the stock of all African countries. So there are also all African countries that are covered. So 54 African countries are covered in the database. Over time into haven and non-haven countries. Again, I use this classification from Anderson et al. 2017, which is quite a standard. Why do I make this distinction? Is because like I'm going to go there in more detail later again, is that just holding a deposit offshore, it's not illegal, cannot be directly linked to tax avoidance. But we can generally say that in non-haven countries, we can maybe see more of a business purpose behind this offshore deposits, whereas in haven countries, I would generally classify that as a more risky flow. And this is $1 billion of US dollars. So that's a really significant amount. So in 2020, it's 350 billion of offshore wells. Now we're looking at exactly the same graph, but instead of the stock, I use the flow measure. So what every year moves in one way or the other way. And again, split between haven and non-haven. And we can see now the picture is a bit less unclear. So here in 2017, we had a significant reduction of offshore holds in holding of deposits in haven countries. But for the total of Africa, it's not so easy to interpret it. So in the next step, I use Nigeria as an example. So here again, we see the same image, but now we're only looking at Nigeria, and there we can say in 2020, it's almost 30 billion that is held in offshore deposits. And here we have to say again, this does not cover securities. So it's the total holding of offshore. This is a lower bound estimation of the total holding of offshore wells. And it would be really good to complement this data with the data from the Swiss Central Bank, because they're also covering other elements, and Switzerland is also here. So it's really interesting to link these two data sets together and then compare it with the information that you have in the on the administration side. And then in Nigeria, now we're looking again at the same graph that we looked before, but instead of the sum at point T, we're looking at the change that it's happening from year to year. And here in 2014 and 2016, we could see there was a reduction in this bank holdings. And in 2013, there was a very sharp increase. But how to interpret it, it's a bit vague, because it does not necessarily mean that this money, when it's a negative flow, went back to Nigeria. It can also mean that instead of bank deposits, people are now holding securities like bonds and stocks and bonds. And this would then no longer be reflected in the statistics. So completing this data with the Swiss Central Bank data, I think it's really adds a lot of value. Now here we look at the stock of deposits for all 11 countries, and on the top we have 2015, and at the bottom we have 2020. And so we can see that there were some changes. We can see that this is again in billion US dollar. We can see that South Africa, Angola, and Nigeria are in terms of absolute the largest of offshore deposits. These are also very big economies. So in the next step, we're going to weight this in terms of GDP. And we can see a little bit that for some countries, like for example, for Nigeria, there was a really significant increase of 500,000. But other countries are more or less stable, like South Africa and Angola. We see also a significant increase for Ghana, and similar here for Zambia as well. Now we're looking at the flows, and now we're looking at haven and non-haven. So this is really interesting. So for example, in Angola in 2015, you had a reduction of holdings in non-haven and a huge jump in haven countries. So there is also an investigation to be made if maybe there was a change in regulation that pushed people to move from a non-haven to haven. So this dynamics really have to be analyzed in the specific national context. And also giving was there a change of regulation? Was there a change, for example, in the valuation of domestic currency vis-a-vis international currency? All of these are potential drivers to offshore deposits. So is, for example, also economic or political uncertainty. Like, for example, now with Corona crisis, there was a lot of uncertainty. So one might expect that that triggered movement to offshore havens, but obviously this needs to be more closely investigated in the national context. So now we're looking at the same picture that we looked at before, at stock of offshore in percentage of GDP. And here again, we're comparing 2015 to 2020. And what we can see that in percentage of GDP, besides, I think, Senegal, it has increased for all countries, and it is significant. So for example, in Angola, it's in 2020, it's almost 3% of GDP. Here we have now the flow measure as percentage of GDP. I think it's a bit, I think the stock measure is interesting to interpret it in percent of GDP, and the flow measure more in terms of billion US dollars. But here again, we see something, so green is 2015 and blue is 2020. So we can see some dynamic, and this dynamic really needs to be interpreted in the national context, because there you have the knowledge, like, you know, if there's some law that changes, if there's some other administrative regulation that changed, and all of this can drive this kind of dynamics. And I think this dynamic component has not been analyzed yet in great detail. So now, after looking at the different data and the different outcomes per country, we now have to try to find a way to link offshore wealth to illicit financial flows. So offshore wealth per se, it's not illegal or illicit, and there can be legitimate business reasons to keeping deposits offshore, but it can also be an insurance against, for example, fluctuation in domestic currencies or other uncertainties. Similar to the trade gap method that we will discuss later this week, I think tomorrow. The activities that are generating these movements of offshore wealth cannot be identified. So even if we can understand that there is something hidden in terms of private wealth, even if we're able to identify this, we do not necessarily know without the we do not necessarily know if it's just tax evasion, tax avoidance, or criminal proceeds of crime or corruption. That is not something that we can see. And lastly, it's the data leaks. So the data leaks can be also used as an investigative tool. So basically, because the data leaks there on the level of the individual or the corporation, whereas this international statistics, they're on the level of they're looking at the country as a whole and the destination country. So here, this data leaks can be really useful to be fed into this international statistics and also as an investigative tool. So even though we cannot link offshore wealth directly to tax evasion, we know how tax evasion works. So tax evasion is often like shell. They call it shell company, but really it's a front company. It's a company that exists just on paper or to do some small administrative business, but that doesn't have a real economic contribution. Fake invoices, offshore accounts, and disassociate legal and beneficial ownership. And we know that especially haven countries, they facilitate at least 3 of these 4 elements. So even from the data, we cannot say directly offshore wealth equates to tax evasion, but we know for tax evasion, that is one of the biggest instruments that is used. So I stole this from Bojan's presentation to kind of link this data manipulation side to more the concept that was presented by Bojan. And so basically we want to, what we have from this international statistics is the beta. So the beta is the sum of assets of citizens reported by the other countries, so by these 43 financial centers of citizens of or residents of your country. That is the information that we can gather from the international level. But this alpha, which I highlighted here with a red circle, that is information that you have. So you know the deposits that are held by your citizen, or you know what is declared to be held offshore. And so basically, that's why I said this is an offshore puzzle, and you're holding the key to make this complete this puzzle is really the national administrative data and comparing that to international statistics. And the best is to have a triangular approach, to have international statistics, your data, and then also look at the data leaks, because they give you information on a, let's say, micro level, whereas this international statistics, in the end, they remain macro level, so meaning on the country levels information. So quickly talking about conclusions and policy recommendations is that offshore wealth flows are large and they are growing. There has been really significant growth, and this growth will continue. The offshore centers, they have different specialization, and many of them are legal and legitimate. For example, Luxembourg is associated with investment funds, Cayman Islands with shadow finance, US Cayman is cash management, and personal wealth management is normally Switzerland or Singapore. That's why I also said that if you look at hidden wealth by individuals, looking at the banking data from the Swiss National Bank is really interesting. And some of these offshore centers, they do facilitate tax evasion for wealthy individuals. And I think what is really important also to keep in the back of the mind that capital flight has a very negative impact on domestic economies, even if it's sometimes not illegal. So looking forward, even non-illegal tax evasion, tax avoidance kind of capital flight should be discouraged. In terms of policy recommendations, there is the UK introduced a tool which is called unexplained wealth orders, I think in 2017 legislation. And this is a very, very interesting legal tool because it basically reverses the burden of proof. What does that mean? It means usually if I want to confiscate the court to confiscate the assets of somebody, the court has to prove without reasonable doubt that that person was involved in criminal or illegal activity and has gathered these assets in an illegal way. Meaning that this, so to come to this moment, you need a lot of investigation, a lot of resources. It takes a lot of time to collect all of this information and really prove the illegality of the assets. Then it takes the court, and then sometimes this information might not be sufficient in the court. So after all of this effort, it might still be in vain. But reversing the burden of proof means that you tell this individual that we know that you have ABCD assets and that's the value is this high. So now you have to prove to us what are the legal or legitimate income sources that you used to accumulate these assets. And I think that is a very, very powerful tool because now this investigation, finding together all the proof that it's criminal, and also especially the time frame that it sometimes takes to do, because it's a very difficult job, is now kind of cut because you tell the person who is holding the assets, please prove us that this is from legitimate sources. So I think in terms of legal innovation, that is very, very interesting tools that a country could use to kind of reduce the burden on and time and money on the domestic administration and kind of reverse that logic. And then the other one is the World Bank UNODC stolen asset recovery initiative. And here we have a small picture. I think this was from 2019 to show this. So this can be used to recover stolen assets from abroad. And here we have a snapshot. This is not up-to-date data, it's from 2019, basically showing the African countries. So Nigeria is top in using that tool, but it's a very long process, and it's also legally a very, very difficult process. And then we can see some of the other African countries that also managed to recover some of the stolen assets. So this is the conclusion of my presentation. I'm showing you quickly here the data appendix, where you have the different data sources. You have the link to the data sources. You also have the link to recent studies that are using these data sources to get kind of an idea how this data can be used. Thank you.
Thank you very much, Carlotta. Can you hear me well now?
Mm-hmm.
Okay. Thank you. Thanks a lot. So I could see, yes, we have a hand raised. Biola Shotunde, do you want to take the floor? I saw you also posted some questions in the chat, but feel free to take the floor and unmute yourself. Thank you.
Thank you very much. And thank you for this very useful presentation. This training has been very useful and it's very insightful. And So my question is, you talked a lot about the offshore asset and the safe havens. I already posted that. Are we assuming that all safe havens wealth are illicit financial flow? And how do you want to validate this assumption if that is how we want to assess the offshore asset? Again, also, I'm interested in knowing the role and how do we assess the vulnerability that comes with the special SPVs utilization in big projects and big businesses in countries. I saw that the data referenced a lot of Nigerian transactions, which I think they are relatively valid. But I just want to know what is the clear assumptions and how valid will that assumption be in terms of being put to use operationally. Thank you.
Thank you for your question. I can see a second hand. Maybe we take the round and then you answer, Carlotta. Eliman, vous voulez prendre la parole?
Oui, merci beaucoup. Juste une seule question à Carlotta. Quand elle propose la proposition de la Grande-Bretagne. Alors là, il y a quand même un problème, c'est comment lever les obstacles juridiques. Parce qu'il s'agit d'un outil qui privilégie le renversement de la charge de la preuve, ce qui n'est pas possible dans plusieurs pays où, en fait, le cadre juridique, le principe juridique ne le permet pas. Dans les constitutions, c'est le renversement de la charge de la preuve. Donc, pour essayer de prouver un peu l'origine de ces flux-là. Donc, c'était juste ça, comment contourner cet obstacle juridique qui empêche véritablement de pouvoir utiliser cette proposition de manière efficace.
Merci beaucoup, Eliman. Is there another question, comment? Okay, I can see a question in Portuguese in the chat. I don't know if, Nilton, do you want to take the floor? That way we can hear, we can have the interpretation. Okay. So Carlotta, do you want to answer the first two questions and then we'll see if Nilton, I'll try to translate what he's saying. Maybe it's about the interpretation, but go ahead.
Okay, great. Thank you, Miola. Thank you, Eliman, for this very interesting and pertinent questions. So I'm gonna answer the questions. I'm starting with Viola question. So we cannot equate offshore financial wealth with illicit financial flows. That is why I said it's so important to compare this international statistics with your national data to understand what is held, what do citizens of your country say that they are holding offshore, and to then basically compare these two figures that you have to try to identify undeclared hidden assets. So that would be the goal of the exercise. And then if it's undeclared or hidden, then we can make these links to illicit financial flows. And so this presentation that I showed you today was really focusing on private hidden wealth of offshore wealth of individuals. That's why we selected this in the database, the non-bank transactions. And I think if you want to look at companies, it's even more tricky, and I will have to get back to you on this because that is not really what I looked at in this presentation. But I do think that, you know, in the end, private individuals are also the owners of companies. And so oftentimes it's then not necessarily the company, but it might be the private individual that move bank deposits offshore in order to lower domestic tax burden. And for Eliman's question, it's true. So this tool that I presented, it's very new. So this is legal innovation. You know, as a regulator, you're always kind of running behind the criminals or the rule breakers, trying to make better laws in order to curb, because this is finance innovates very quickly. And this, I think I've only heard about this in the UK. It's very novel. It has just been introduced, but I do think that laws change, laws can be changed, and laws should be changed to accommodate this more globalized financial infrastructure. And like I said, it was only introduced in 2017 in the UK, and I do think that this, over the long term, that is something really interesting that countries should look at in terms of legal innovation and changing of legal processes. Thank you.
Thank you, Carlotta. I hope it was clear for the people who asked the questions. I don't know if anyone else has a question. I've just explained in the chat concerning the Portuguese presentations. They will be uploaded in the web page. Unfortunately, we are facing some delays with the interpretation, but it will be done. Okay. Any other comments, feedback, questions?
If may I, Amandine, just very
Yes.
briefly.
Go ahead.
So just to add to essentially what Carlotta was saying, or to echo her. So I think, especially relating to the last question, but also to the first one, essentially. So first of all, it is very important that we have all the national expertise that we can get on board. This also means bringing other institutions and a collaboration within the country to address whatever issues that we are facing in terms of the measurement side. But this is also very important in terms of the legal aspects and the administrative purposes, prosecution. This so-called whole of government approach, I think, is very crucial. So specifically, illicit financial flows are a very sensitive topic. Of course, we do not want our country to be dealing a lot with the illicit financial flows, but they are a reality in every country in the world, which means that adaptations, legislation formulation or changes are essential, collaboration with other authorities. So this is all a must in order to address and tackle and understand the issue. So both from the sides of the measurement, but also on the policy applications or implications. Having said this, however, I would like to reiterate that specifically in terms of the measurement, it is extremely important that we do abide by fundamental principles of official statistics and that we safeguard confidentiality in firsthand before we make any steps ahead. So this has to be brought into a legal framework. So not only statistical act, but also any other acts, and many examples, many work has been done on the legal aspect, and Carlotta has said it very well. It's a changing world, and legislators also have to adapt to those new needs that have occurred. And I believe COVID has essentially spurred those discussions very sharply and made a huge step ahead. And therefore, I think it is very important that there's a high appreciation of specific fields to be brought into the game. So yeah, so essentially just echoing that what Carlotta has said, it is important to collaborate and work in a statistically safe environment. Thanks.
Thank you. Thanks for this additional comment. I don't know if it's triggering additional questions or comments or feedback. If it's coming later on, you can also send us an email and we'll reach out to the speakers. So if you have a question that you want to ask to Carlotta and it's this afternoon or tomorrow, we will definitely tell her. I can see a question in the chat right now. My question is that since many people are now using e-currencies to store wealth, is there a way to measure these assets? Yeah.
Well, I mean, I'm not aware of this. So this is very traditional bank deposits. So I can look into e-currencies, but yeah, the e-currencies making the whole of the measurement much more difficult. Also because oftentimes the owner is somewhat hidden. So I've recently been in a panel that said like, actually sometimes it takes years of finding a way that even if you know that this person does criminal activity and there is and they're using e-currency, so even if in a criminal investigation that would come out, it's often then very difficult to link that specific person to that e-currency account. So then there is like another wave of investigation that is necessary. So then this whole e-currency business makes everything much more opaque and it makes all of this tracing much more difficult. Luckily, not all criminals are young and technological, very well versed. So that's maybe the lone advantage that we still have is that, yes, we are young people. Yes, we know e-currency, but maybe the older generation is not investing in that so much. But yeah, it's much more opaque with e-currencies.
If I can just add a note on that, yeah, I mean, the e-currency and, you know, cryptocurrencies, blockchains and everything, this is making lives to detect much harder, if not at cases impossible. I'm not well versed in all these things, but I have a friend who told me, he says, well, you know, I can essentially use it and I can just put my my assets abroad and nobody will have, in theory, a chance to find me. So, of course, those things are problematic, but I think, again, we can go back to the question of the regulation and the legal framework. If there is a legal framework to suggest what can be done, what cannot be done, what has to be declared, what cannot be declared, then there is, of course, a more pressure. One from the morale side, one from the society pressure, but then also technological advancements will happen. In the IFF sphere, as it is with other purely illegal activities, the prosecution side, or the one that is trying to estimate it, is always lagging. We always know that. You know, we are always one step behind the activities, and as soon as something is clear, then we find a way how to measure something. A new method comes up, a new means to hide it. So essentially, there's a never-ending struggle or a fight to go around it, which of course is good, and you know, eventually I'm sure there will be another options and other possibilities to find those. But currently, I think cryptocurrencies are causing a major problem, specifically in terms of official statistics, being unregulated to a certain degree, or to most of it, would also mean that collecting data on them in a systematic, standardized way is virtually impossible. So yeah, this is a big challenge that we have to face, but also we also have to consider how much of that money will actually be somewhere. So, you know, at some point we have to understand we will never be able to fully see and measure all of it. So let's try and use whatever efforts we have, limited resources we have, to collect the low-hanging fruits, which means to at least try and get some sort of indications of where we are. So maybe just as a thinking out loud of this, but I think this is a very challenging question. Yes.
Okay, thank you. Any last comments? Last questions before I give the floor to Carlotta for some last words, and then Bojan, and then we will be closing the session of today. So anyone wants to take the floor or send a message in the chat? Okay, it seems clear. Otherwise, as I was saying, feel free to send us an email and we'll respond later on. So before we close, Carlotta, do you want to say something, closing your remarks?
Yeah, so I think I would like to reiterate what Amandine just said. If there are any specific questions related to the data, related to the triangular approach, how to combine the Swiss data with the Bank of International Settlement data that I showed today, you can always email me. I've also already prepared this data for the 11 pilot countries. I think maybe we'll also put that on the website, Amandine. And so if there are more specific questions, it also, if you ask me questions, it also helps me to improve for the next presentation or for the next approach, how to measure this, because like I said, it's a puzzle. I can only see the international data, you have the national data, and how to put this two together. I think there will be a lot of questions, but we're here to answer your questions, and as far as possible, share the data, or also look, if you want to share the data with us, look at the data as well. And yeah, I think that's my last main comment.
Thank you. Bojan, do you want to say a word, and maybe also about tomorrow's session?
Yes, thank you. So, I mean, first of all, a big thank you to Carlotta, for the preparation and sharing all these useful tips and information, how to go about the BIS statistics, how to interpret them, and how to put them together. What you said, I think, is crucial. Essentially, we are now in the pilot testing phase, which means that we are taking this in iterations. So we try and present something, then we try, or you try and apply it, and then there's back and forth with questions and enhancements to the questions, to the challenges, and to the methodology. At our end, of course, we will strive to provide any guidance and any technical support that we can provide in terms of the questions asked. So please do not hesitate to reach out to us when you start applying, when new questions come out. And ideally and hopefully in a few months' time, we will have some good feedback to guide us either into a new direction or into a refinement of the existing methodology. The main purpose of this entire project and this trainings and discussions is to come up with a method that could be reasonably applied in various countries in the world to address the illicit financial flows from a statistical perspective. So again, with this, thank you to all the participants for joining in, for a nice discussions. Thank you to the interpreters again. I would also like to ask you to take a few minutes of your time to fill out the feedback form. I will be posting it in the chat, the links to the forms. Oh, I think they are already there, right?
Yes,
Yeah.
Susan just posted them.
Okay, perfect. Great.
Hope that these are the right ones, the same of yesterday.
No, it's not the same as yesterday. It's a new one.
Okay, so maybe you can repost them.
Okay, I will still do it. Yeah. For tomorrow, so we have tomorrow another sessions. We will be looking into the next method, so to say. So addressing the global global offshore wealth, and then try to trickle it down by countries. So this is a method that has been proposed and applied by a few researchers, and mostly described in a European Commission document. So we will try and go through it a little bit and present to see how essentially potentially we could be applying it. Unfortunately, also tomorrow, I think it'll be even less practical than today. Apologies for that, but I think those are the new methods, and as we move along, we will find new ways how to address it. Also at our end, we will try and provide some additional methodological development in the coming weeks or months to address it. Nevertheless, I hope this has been useful, and hope to see a few of you tomorrow again. And with this, I just say thank you to everybody, and have a wonderful afternoon, and stay safe. Thank you.
Thanks, Bojan. I could see some questions in Portuguese who came in while we were closing. We will copy paste them, translate them. Sorry, we don't speak Portuguese, and we will send the responses by email. So as Bojan was saying, kindly fill the form that he just copy pasted now in the chat. That's the last message from Bojan. And yes, so thank you so much to everyone. Thank you, Bojan. Thank you, Carlotta. Thank you to the participants for your time and your flexibility as well. Our apologies for any technical issues. Thank you to the regional coordinators' offices who were able to join us, and a big thank you to the interpreters for the great work. Without you, it would be very, very complicated to communicate with everyone. So thanks a lot, and see you tomorrow. Have a nice afternoon.
Thank you. Take care, everyone. Bye-bye.
Thank you, everyone. Bye-bye.
Thank you. Bye.
Thank you. Bye.
Thank you very much.
Thanks to you. Thank you.
Thank you very much. Bye.
Thank you. Thank you.
We're grateful.
Cool. Thanks. And thanks for your participation.
Bye-bye.
Bye.
Bye.
Bye, Nilton. We'll answer your questions. I just need to translate it. Sorry.
Bye.
Hello, Amandine.
Yes.
Yes, I know we
Okay,
are
thank
closing.
you.
It's no problem. I just wanna put my question because I have used some acronyms there. My name is Sylvester.
Yes.
Yes, my question, it's not, yeah, you can answer tomorrow because you don't need to translate it. You don't need to answer me today. My question is so simple. Knowing that there are some MNEs which the used to spread around the world, the AFFs. My question is, what is the WTO is doing in order to mitigate, to protect the country members? Knowing because these companies they do these AFFs throughout the world, and most of them in the leagues. Yesterday we saw in the model that in Italy, some parts, some countries, they move. The leagues countries are those ones who lose mostly the resources. With this resources, they are used to be sent to another middle countries or rich countries. Then the question is, what WTO, what the world is doing in order to reduce it, and to stop it? Yeah.
Okay. Yeah.
But
I
yeah,
don't
it's
know.
not for today. It's just.
Are you gonna be here tomorrow?
Yeah,
Are you
yeah,
planning
gonna
to
be.
attend? Okay, maybe we can discuss this whole question tomorrow, because some interpreters left and it's the end of the session. So I don't know if Bojan or Carlotta, you want to add anything quick right now, or if we can take the question tomorrow.
yeah.
I mean, I
Super.
can give a very quick answer otherwise. So first of all, WTO, you know, it's not a regulator. The role of the WTO is to facilitate international trade and check that countries, you know, follow these rules of international trade and manage these different trade agreements, but it's not a regulator for companies. So even though I agree with you on a, let's say, I do think there should be a regulator that looks at how these companies are operating, especially that we know that some MNEs are involved in creating illicit financial flows. Unfortunately, until now, there is no international regulator of this affair. So the responsibility always falls back to the national regulator. And yes, it's true, especially looking at the LDC context here, sometimes you have very unequal opponents, let's say. Oftentimes, and I know for the mineral sector as well, is that companies come in, they already have acquired this private information on mineral wealth in the country, and sometimes governments have less information when going to the negotiation table than these companies. And that is obviously a very asymmetric situation that can also lead to unfair outcomes. But unfortunately, there's no international regulator who's looking at this kind of affairs.
Yeah, if I can just add, yeah, I mean, I think this is essentially the main obstacle. So the UN agencies are not regulators, so none of it is a binding resolution or anything, except for the Security Council. But so what we're trying to do is trying to support national authorities with tools how to estimate it, and then also trying to understand what the policy implications would be. So what the implications of illicit financial flows would be on our economies or on our societies. I think that this is the awareness raising, and the first basis is to try and see how essentially to understand the IFFs. And then when we are all on the same page, then we are ready to move ahead. So, you know, there was a recent commitment by I believe the G20, you know, to impose a certain level of minimum taxation for the multinational enterprises, and their ideas about the global tax order and things like this. So discussions are taking place. Of course, this is not a solution yet, but I believe it is a start. So also our work right now is essentially important to understand that we will not be able to provide an exact figure, which will be fully robust and standardized and everything, but we are striving. We were trying to get there, so that's why we have to take little steps. So yeah, it is by far not an easy question, and we don't have a direct response for that. Thanks.
Okay, but it's a good debate. It's a good debate. So if you want to say it again tomorrow, when every participants are here, it could be good as well. Because now a lot of them have left. But yes, thank you for your question.
Yeah. See you tomorrow.
Thank you.
Thanks. You. Have a good afternoon, everybody. Take care.
See you tomorrow.
Thank you. Bye-bye.
Bye.